Welcome to the Wealth Studying Podcast. This is episode 458. Today is November 28th, 2024. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. Well, happy Thanksgiving. All but one cohort of the grandchildren will be over today for dinner. So this place is about to become a madhouse. Before they all get here, I just want to drop a real quick episode, and this is sort of a follow-up to the previous episode because no matter how much I try and explain my positioning in the stock market, people are so Pavlovian geared to ideology that it's hard for anybody to believe that I'm not either pro-Trump or anti-Trump, or pro-red team or pro-blue team. So think of it this way. If I were planting a garden this spring and I decide to hold off, because based on my analysis of the weather, I think there's a high likelihood that we'll get a late frost, which would obviously kill any plants or seedlings that I put in. So I'd be postponing not because I'm in favor or I'm pro a late frost or that I'm anti early spring warm weather. It's just that my analysis of the situation is that that's a likelihood. So I really want to reiterate the fact that my portfolio has not changed since the election. Now, I did add a small position to Google, but I had already owned Google. No other trades have been made in my portfolio prior to the election, and really prior to maybe 3 months before the election. And I was not geared up for a portfolio that would favor a Trump election. I literally had no idea who was going to win. So I want to follow up in today's episode with some negativity on what could go wrong under the Trump administration. And this is just a few items off the top of my head, but there are things that I've been thinking about and trying to plan contingencies for. Oh, and let me step back here a second too. Hey, this time of the year, people are always looking at making changes to their portfolios, and so my firm gets a lot of contact from prospective clients that, are interested in our services. This time around, I'd say there's more of a response than normal. That probably has to do with the market being up, and I think a great deal having to do with people that are enthusiastic about a Trump presidency. Here's the bottom line. My firm does not try and be all things to all people. So if the majority of your enthusiasm is about a Trump administration and those positive effects on the stock market, it's likely that my firm isn't appropriate for you. Because again, I'm not pro or anti-Trump. But I firmly believe that the long-term trends are in place, and I'm going to invest around those long-term trends regardless of who's sitting in the White House. So if you're looking for an ideological portfolio approach, you'll likely be unhappy with either the way I position things or at least with my explanation of the way I position things, because it's not going to come down to ideology for me. Now, that doesn't mean that I won't zig and zag along with what I think may be the effects of a Trump presidency or a Trump administration, because he obviously can and will impact certain areas more than others. But I'm not specifically going to go out and jump into a quote Trump trade, because I think that's more of a fad and short-lived and very dangerous way to invest, as opposed to directing investments specifically where I think long-term trends are dictating long-term growth. A way to look at this is the fact that, you notice that I've never invested in meme stocks. It doesn't mean that meme stocks can't go up astronomically high. It just means that when I analyze meme stock type companies, I don't see, or often don't see, fundamental justification for why those stocks are going up. Now again, that doesn't mean they don't go up. It just means that they can't be based on economic fundamentals. And ultimately, that's what I screen for first. I'm looking for realistic, rational reasons, primarily based on profits or the expectation of future profits, as to why I'm going to invest in something. Not just because someone simply likes it or because it's a fad or because a bunch of people think it's a good idea. Okay, that's the same way I look at global and economic events. Yeah, they can be affected by politics and politicians, but ultimately, I think politicians, much like the Federal Reserve, are reacting to the trends that are already in place as opposed to creating those trends. And since things like the Federal Reserve and politicians are not very dependable or reliable, I think you're better off focusing on the fundamental direction of the trend rather than trying to just ride the whims of a particular policy decision. In any case, hey, at Investable Wealth, we always welcome talking to new prospective clients. But again, we don't try and be all things to all people. And if you're specifically looking to position your portfolio based on a Trump trade, you're not going to find that here. I continue to focus on the long-term trends that I think have been in place for a long time. That's consequently why they're long-term trends. Hey, in any case, let's look at what's likely to happen, especially early on in this Trump transition. And let's focus on what can go bad as opposed to what can go right. And there are a lot of things that can go wrong. Some of them have absolutely nothing to do with Trump as an individual, others do. The first thing that has absolutely nothing to do with Trump is the high valuations of the stock market. We are trading at historically high price to earnings ratios. Now, on the one hand, that concerns me. On the other, it doesn't. It concerns me because so many people are optimistic. I tend to be a contrarian by nature, so that makes me concerned. On the other hand, for the most part, while valuations are higher than normal, I would also counter that argument by saying that I think they might be high for a reason. It does look like that we can expect higher growth rates than what we've traditionally had. Some of the wind is coming out of the sails of that AI trade, and things are getting more realistic. You're seeing prices come down in a lot of those stocks. And at the same time, we are seeing a broadening out of improved profitability in the non-hyperscalers and the non-tech side of the market. It was 2 quarters ago that we really saw the first improvement in broad market non-tech profitability for the first time in close to 2 years. So that's encouraging to me. And again, while valuations are high, I may be wrong about them being justified, and that could cause at least a near or a midterm correction. So that could go totally wrong, and it could happen early on in the Trump presidency. Now, another thing, and I've mentioned this before, is that although the Republicans hold the White House, the Senate, and the House of Representatives, they don't have anywhere near a majority in the vast institutions that are major power centers for not only this country, but internationally. Many of these institutions are openly hostile to the Republicans in general and Trump specifically. I mean, there's a lot of resistance to Trump within the Republican Party. So it's not going to be smooth sailing for him. He will be opposed at every step, whether it's justified or not, right? That's just the way things work. And I'm talking both direct and subtle attacks and sabotage from the media, academics, from bureaucrats. I mean, do you know how many federal workers or people in the government that may decide to leak documents or create some kind of an embarrassment, right? There's probably tens of thousands of people that would do that. And the media would be more than happy to run with that. And again, getting back to that analogy of planting seeds, it isn't that I'm pro early frost. I'm just simply telling you things that have a probability of happening. Look at what happened just prior to the election. The East Coast port dock workers were going out on strike. That could have been a major economic event because it could have effectively shut not only the whole East Coast, but even deep into the Gulf of Mexico. A prolonged, bitter strike could have not only shot up inflation, but could have devastated the stock market. Now, conveniently, that got quickly resolved within a few days and had no negative consequences going into the election. Now, what you may or may not know about that is that that strike was not settled. It was not negotiated. It was simply postponed. I think it's postponed until January 15th, which non-coincidentally is just about the time the new president's going to step into place. So conveniently postponed till after the election. Expect more of those kind of things to be resistance against anything Trump's trying to do, which, again, may not be a bad thing because not everything that Trump's going to do is going to be good. So some of that may be beneficial. We'll have to wait and see. Another thing that I mentioned before was that while Trump does have a majority in the House, or the Republicans do, it is paper thin and it's getting smaller every day. So a special election that favors the Democrats or an independence or even like a defection would mean that that majority is lost. And while that may not have as much of a policy impact, because there are a lot of things he can do through executive order and other things he can do with just the Senate, like, for example, confirmations, What the House can do and where they can really throw roadblocks up is their special investigators and their special counsels. I mean, you can be sure that if the Republicans lose a majority in the House, the investigations will start immediately. Another thing is, the big promises that are being made, especially along the lines of cutting the bureaucracy and reducing the federal budget and the deficit. If there are major budget cuts or major reduction in government spending, consider how much of GDP is based on government spending. So even if it's a good thing long term, it could be very devastating to the stock market short or near term, because if those budget cuts cause the GDP to go down, then that in and of itself will create a recession. And stock markets don't like recessions regardless of the cause. Now, another thing, Trump is going to be, I think, 82 by the time his 4 years would be up. So he is going to show mental and physical decline. He's not going to get a pass. And he's pretty much at the end of his life cycle, right? And again, that's just a statistical fact. He could live into his 90s, but most white men don't live much beyond 82 or 83. So the fact that he's towards the end of his terminal shelf life are going to be front and center and presented to the American people and the global stage every day by the institutions and mainstream media. And it's going to be a continual roadblock that's put up in front of him. And it will likely be a realistic issue, just like the Republicans' concern about Biden's diminishing abilities were. But again, the difference being the mainstream media will be more likely to promote it against Trump than they did against Biden. Another big problem that could occur, and this could occur very early in the Trump presidency, perhaps before he even takes office, and that has to do with global oil prices. Now, I know Trump's been talking about drill, baby, drill, and overall oil prices have been suppressed because of a lack of demand primarily from China. But another factor that oil prices, gasoline prices in particular, were lower this summer was because the Biden administration had gone out of their way to do everything they could to keep gas prices lower, right? That was from tapping into the strategic oil reserve to encouraging restraint on enemy oil facilities. Okay, if you look in the mainstream media, they reported this, right? I'm not making this up. It was stated that, or reported anyways, that the Biden administration talked to both the Ukrainians as well as the Israelis and told them to go easy on attacking oil or oil-related infrastructure that could spike up the cost of oil on a global market. So the Ukrainians were told to go easy on Russian facilities, and the Israelis were told to go easy on the Iranian facilities. Well, we know that Biden has already authorized U.S. weapons to be used for long-term strikes into Russia. So you might see some deep strikes into Russia, specifically oil structures. That could really escalate the price of oil before Trump even takes office, which would have a bad impact on his first or couple quarters in office. Now, another problem has to do with Trump's proposed policies. And again, this isn't hating on Trump because these were also Biden's policies and would have been policies that Harris would have continued and likely added to as well. And that's the higher tariffs and sanctions and restrictions on trade. And while I think there's a lot of advantages to that for domestic reindustrialization and supply chain issues, there's always the downside of that, which if you go back historically, a lot of people blame the Great Depression on the Smoot-Hawley Tariff Act. So we know from a historical perspective, tariffs can escalate and cause a global depression, at least a global recession. And when we look at places like Europe, they're basically in a recession right now anyways. And China's done a good job of fudging their numbers, but there's nothing good happening there with their real estate market. And they continue to be plagued with excessive unemployment, especially among their youth. So higher tariffs could just make things worse. That could also promote a stronger dollar, which again could have a lot of advantages, but at the same time, it could cause major devaluations of other currencies, and because of the way foreign debt is structured, that could cause a ripple effect, and we've seen this happen time and again. It happened in Asia back in the early to mid-90s, and we saw a slight version of that happening around maybe 2014, early 2015, when the Chinese unexpectedly devalued their yuan. That had ripple effects into the U.S. stock market. And it could again. It is a clear and present danger. Also, when it comes to sanctions and trade restrictions, from a historical perspective, that can often lead to military aggression or all-out war. There are a lot of historians that believe that Japan was provoked into attacking Pearl Harbor because of the sanctions we had on exporting oil to the Japanese. A lot of parallels with what's going on today. And one final thing about what can go wrong with Trump, and that's Trump himself. He is his worst own enemy. Even if you love the guy, you have to admit his big mouth and his big ego consistently get him into more trouble than he should be in. He makes himself a target for the Democrats to abuse. Now, we all have human frailties, so I'm not picking on Trump here. And that's something we should look internally on our own self as well. Most of the problems we have in our lives are a consequence of our own decisions and actions. But I'm not going to digress. That'll wrap it up for today. I hope you have a blessed and happy Thanksgiving. And please come on back for future episodes of the Wealthsteading Podcast. Until then, as always, this is John Pugliano wishing you the very best returns.